General Business Credits, Part 1, Research and Development Credit. Depending upon the type of business activity you conduct, you could qualify for a Research and Development Business Credit. Check out my new video to see if your business activity qualifies.
Welcome to this episode of Accounting and Tax Tips, Smart Strategies for Small Business Success, with Certified Public Accountant Tina Moe.
Under the Internal Revenue Code, Section 41, taxpayers may be able to claim a Research and Development Tax Credit, often referred to as the R&D Credit, which can be a significant tax incentive for companies who qualify. Even though this credit had expired as of December 31st, 2011, the American Taxpayer Relief Act, signed in January 2013, extended this credit through 2013, but with some extensive modifications. This powerhouse tax credit generated nearly $10 billion in tax savings, but only 1 out of 20 small to mid-sized businesses took advantage of it, according to Forbes. It's the bigger corporations who have taken this credit for the most part. So what is the R&D credit and who qualifies? R&D tax credit is both a federal and state tax credit that reduces income tax for both corporations and flow-through entities. This credit was introduced in 1981 as an incentive for U.S. companies to stay competitive in the area of technology. Unfortunately, there were extremely strict requirements imposed, which is why a lot of smaller companies weren't taking advantage of the credit. In 2001, President Bush and his administration reviewed the rules and the overall use of the credit and took notice that smaller companies weren't utilizing the credit. In response to these findings, he eased some of the strict requirements to simplify the qualification process in hopes of encouraging smaller companies to make use of the credit. Until the year 2010, the credit could only offset the difference between regular tax and alternative minimum tax, or AMT. As a side note, for more information about AMT, check out my show that explains alternative minimum taxes in more detail. In 2010, President Obama signed the Small Business Jobs Act, which eliminated the 2010 AMT restrictions on sole proprietorships, partnerships, and non-publicly traded corporations with $50 million or less in average annual gross receipts for the prior 3 years, referred to as the Titan Armor 2010. This new law allowed businesses to carry unused credits back 5 years, where before they had to be carried back 1 year or carried forward 20 years to offset future taxes. So who can benefit from this credit? There are many industries that can qualify for this credit, such as graphic designers, software developers, aerospace professionals, pharmaceutical companies, electronic manufacturing, and a whole host of other industries with qualified research expenses. So that brings us to the next question, which is just what are qualified research expenses? There's a 4-part test that defines the broad term of qualified research expenses, or QREs. The first test says that the research activity must have a permitted purpose. In other words, the activity must relate to new or enhanced business components in one or more areas of function, performance, reliability, and/or quality that the taxpayer intends to hold for sale, lease, license, or actual use in the taxpayer's trade or business. The second test pertains to the elimination of uncertainty. The activity must be intended to discover information to eliminate uncertainty concerning development or improvement of a product or a process, or the appropriateness of the product design. The third test is the experimentation process, where activities must be part of an evaluation of alternatives to discover information, confirm a hypothesis through trial and error, or result in the abandonment of the hypotheses, all which are meant to eliminate the uncertainty. And the fourth test and final test is the nature of the research, and that it must specifically be technological in nature. The activity performed must fundamentally rely on the principles of physical, biological, or computer sciences or engineering, according to the IRS. The qualified research expenses I just mentioned also takes into consideration qualified wages, supplies, and contractual expenses in the overall calculation of the credit. So not only does the activity have to qualify, the related expenses do as well. There are 2 standard methods of calculating the credit, and is a fairly complex calculation. If you think your activity qualifies, seek the advice of a tax professional. Here are a few questions you should be asking yourself to see if the credit may be a benefit available to your company. For instance, do you manufacture products? And if so, what type of products? Do you spend time or money to develop new or improved existing products or processes? Do you have engineers involved in your business, and do you have any patented products or patent pending products? If the answer is yes to any of these questions, you may want to delve further into the R&D credit to see if you qualify. For more information on this and other topics, visit my website at www.actservices-inc.com.
Thank you for watching this episode of Accounting and Tax Tips with Tina Moe. For more great information, visit Tina's website at www.actservices-inc.com. Also browse the other shows found right here at Indie Biz TV Shows.